Hello, everyone. My name is John Howe, and I'm back with another episode of John's Top Tips. Now, I know what you're thinking, John. If I see one more headline about interest rates, I'm absolutely going to lose it. I'm right there with you, especially because most of those headlines don't mention what rising interest rates mean for you and your family. So, I'll take some time today to talk specifically about what to expect with rising interest rates and how it impacts your savings. Some of you might not know this, but interest rates have been at historical lows almost since the very beginning of the financial crisis. When we entered into the financial crisis, the Fed undertook several measures that led to lower interest rates over the past decade to try and stimulate the economy. While some of us watching this video have never seen a mortgage rate above 5%, others of you can remember your first mortgage had an interest rate of almost 10% or more. I'm not saying this to be patronizing. This is just to lend a certain amount of perspective to the situation. With the impact of various factors on the labor and economic situation, the Fed's kind of dragged its feet on raising interest rates until the past year or so. What does this mean for us? Well, it very simply means that borrowing money will become more expensive across the board. Interest rates on everything from mortgages to auto loans to personal loans will become higher on an ongoing basis. If you're looking to buy a house with a mortgage in the next few years, you may be able to afford less house than you could over the past few years. It also means that home equity loans become less attractive. So the equity we build in our homes when we make our payments becomes less easy to tap back into. It also means that if you have an outstanding home equity line of credit with a variable rate or any other type of loan with a variable rate, it may be time to consider paying that off or refinancing it at a permanent rate. But there has to be some advantages, right? Well, hopefully. One of the advantages we hope to see is some kind of a return of higher interest rates on bank savings accounts and other safer savings alternatives so that our safe money can do a little bit more work for us. Also, higher interest rates mean that the housing market may finally start to cool off. We may see demand for houses decrease, inventory increase, and prices fall as a result of more widespread housing availability. This might help to negate some of the negative consequences that rising interest rates have in terms of mortgages. Altogether, rising interest rates can be challenging for your overall financial picture, but it does present some optimism in terms of growing your assets. How are you feeling about rising interest rates? Do you think the Fed should have been raising rates sooner or that they shouldn't be raising them now? Email me at jhow@gencapmgmt.com to let me know. As always, be sure to check out our resource page on our website, gencapmgmt.com, for a whole bunch of guides, blogs, and videos to help you on your financial journey. Again, my name is John Howe. I'm the financial planner here at Generation Capital Management, and this was John's Top Tips.